Hi, this is Alessio. I hope you're well, and welcome to this update. In this video, I want to tell you why I'm hoping that the markets, the financial markets, collapse soon. So I want to explain to you why I'm hoping that the stock markets collapse hopefully in the next 12 months. But actually, I believe that the stock markets are due for a major drop and potentially a major correction in the next 12 months. And I think that in the next few months, by the end of the year, by the end of 2019, we could see at least a 10% drop in the stock market. So the first chart I want to show you is this chart here of the smart money versus dumb money confidence in the rally in the stock market. This chart is courtesy of Jason Geppert of Sentiment Trader. Now, you can see on the right-hand side, those two arrows. The red arrows pointing to the dumb money confidence. In other words, the majority of people, the majority of folks out there. The problem is, guys, the majority of folks, again, what we call the dumb money confidence in the markets, they're usually on the wrong side of the market. Whenever there's a massive divergence between dumb money and the smart money confidence, usually that's a turning point, a major turning point for the stock market. So right now it seems that the dumb money is extremely confident about a rally in the markets, usually a contrarian indicator. Let's go to the next chart, guys. You can see over here, according to Jason Geppert's data, we are right now potentially 12 months away from a major recession in the markets. Whenever the yield curve has become majorly inverted, this creates a high risk of a recession. Right now, according to the data, we're at the highest risk of a recession since 2007. In previous times, for example, whenever this has occurred, we've ended up going into a recession. Okay, let's just leave this chart for a moment. So my point simply is, guys, that as far as professional investors are concerned, for professional investors and traders, the way to make money for them, for professionals, is in a bear market, not in a bull market. Most people think that the way to make money or wealth is in a bull market. Actually, it's the opposite. Let me just give you an example. When would you prefer, for example, to have bought Bitcoin? Would you prefer to buy Bitcoin at the peak of the 2017 highs in Bitcoin, was trading at, at $15,000 to $19,000, $20,000? Or would you prefer to buy Bitcoin, was much cheaper at the end of the last bear market in 2015 when Bitcoin was trading a few $100s, a couple of $100s, for example? It's a no-brainer, right? Same goes with the stock markets, for example. Let's take a look at this chart. So you can see, for example, that, again, just a question, would you prefer to buy stock markets back in 2007 when everyone was greedy, when everyone was extremely excited about stock markets, or would you prefer to buy stock markets or stocks at the end of the last major crash or towards the height of the recession in 2009? And again, it's a no-brainer. So the bottom line is, guys, that professionals do the opposite of the herd, the opposite of everybody else. Same goes with the year 2000. Would you prefer to buy stocks in the dot-com bubble of 2000 or towards the end of that major crash in 2003? So that means this, guys. We just go to the next chart. This chart you see here is a key market barometer showing overbought, oversold conditions in the markets. I get interested in this when the oversold conditions occur below the levels of 20 and 25, when those blue circles occur. When this barometer becomes extremely oversold, again, we'll talk about what this barometer is in future videos. This is what usually happens. Let's go and have a look at the next chart. So notice what happens when that barometer gets oversold. As you can see, this is the major bull market we've seen in the stock markets. And notice those black circles. That represents those oversold conditions, like the Eurozone worries when in 2011, when markets dropped off, in Greece debt worries in 2015, 2016, and also the China worries more recently in 2018. So the bottom line is, guys, those drops in the markets corresponded with great buying opportunities. And I think similar things could happen in the future when the next recession potentially occurs as well, when the next major drop occurs. And we just go to the next chart, guys. Same goes with the housing market, the real estate market. Would you prefer to buy a property in London and the bubble, which carried on to 2017, or at the lows of 2009, after the last major recession? The bottom line is, guys, as you're seeing from these charts, we just leave that for a moment, guys. The bottom line is that, again, history shows, and again, statistics shows, that recessions, while they're certainly painful, I appreciate they're painful and they can be horrifying for most folks, but they also create opportunities. We mustn't forget that. For every major recession, every market crash, there's also an opportunity if you're prepared for it. And again, professionals are usually prepared for those major crashes and major bottoms in the stock markets, where we can essentially pile in and essentially buy assets, whether it's stocks or real estate or Bitcoin, at very low prices. All right, guys, hope this video helps, and I'll see you guys in the next video. Thanks a lot.